Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, August 9th, 2019. We are now in the final hour of the trading day, and we are now in the final hour of the trading week. Boy, what a week it's been, huh? Had some volatility, a lot of volatility, excuse me. Big downs, big ups, crazy stuff, news. But I am grateful for the fact that we had a good week. We had a good profitable week, even through all of this. And so that's the plan, right? We did a pretty good job of navigating this market. But I'll get into that a little bit later. But as most of you know, I prefer to trade at the end of the day. I believe that the closing prices of the day are the most valid prices of the day because that is when the market makers and the large financial institutions come in and take over the prices from the algorithms during the day. And, I would like to be in the camp with those guys because they're big, they're smart, and they move a lot of money. So I feel like I'm in good company with them as far as making my buying and selling decisions at the end of the day with their prices, not the intraday prices. So let's see if everybody can hear me. Let me know. I just want to make sure everything's working well on the technical side. Currently, the market is down. The Dow is down 42 points, Nasdaq's down 66, and the S&P is down 14. But earlier in the day, we were down triple digits, multiple triple digits. It has been quite a week, but we are having a green day. I'm happy to say, and somewhat surprised, but we've had a couple good positions go our way today. So anyway, let's take a look. JT is here. Hey, how you doing, JT? Good to see you as always, my friend. Thank you for coming. Michelle, that's my friend Michelle from Utah. Hey, loud and clear. Good. Hi, Michelle. Thanks so much for coming. All right. Well, looks like everything's working okay. So listen, the plan for today is we're going to go ahead. First of all, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. Then after that, we are going to do a few minutes on trader psychology. As you know from hearing me pound this into your head every day, trader psychology is the most important skill that you can learn in trading. The technical setups, they're important. Yes, you have to learn them, but that's 101 trading. The difference between you becoming a long-term profitable trader or becoming a trader where like 90% of the other retail traders that lose money, the difference is the psychology. The difference is not being stubborn, going with the flow, adhering to your plan, adhering to your process, cutting your losers short, letting your winners run. Letting your winners run can be just as difficult mentally as taking a loss. It also comes down to when you go through a drawdown, when you go through a losing phase, how do you conduct yourself? Do you get down? Do you let things spiral out of the control? Do you get disillusioned? Or do you keep positive and realize that, the trade that you just lost on was one of the next 1,000 trades? If you're trading correctly and you have an edge, the edge will play out in the long run if you play the game correctly. It's just like a casino. The casino does not win every hand. They know that, and they don't care about that. Do you think if a casino lost 20 hands in a row on blackjack, they were like, oh, we're done, we're shutting down the casino? Of course not, because they know it's just one of a million hands to come, and they have an edge, and they're going to let that edge play out for them. And that is exactly how you need to approach trading, everybody. Just like a casino, put yourself in a position where other buyers are going to be there. If you're wrong, get out quickly. If you're right, let the position run your way, and stick to the plan. Right? most traders get in trouble when they have an extended losing streak and they think, okay, well, it can't go any lower than this. I'm going to double up. I'm going to triple up. I'm going to quadruple up my position. Don't do it, everybody. It is not the way to making money. It's the way to the poorhouse. Trust me. I know of what I speak. I've been doing this for 24 years. So again, if you take anything away from this live stream, is treat each trade like the next one of just 1,000 trades. Don't put too much emotional energy into it. If you lose, that's fine. That's totally normal, part of the game. So anyway, yeah, that's why we're going to do some trader psychology. So and then after that, we're going to go through my watch list. We're going to go through each stock. We're going to look at all the support and resistance levels. We're going to look at moving averages. We're going to look at RSI levels. We're going to look at MACD levels. We're going to look at ATR channels. And if we're lucky enough to find one where we can find 1, 2, 3, or 4 of those lining up at the same place, then we might take an entry. And as I've been mentioning the last week, when you get signals, a lot of people say, oh, I got this signal, I need to take it. But do you understand why you're taking it? You're taking it because there's groups of buyers coming in. And if you want to go long a position, if you want the position to go up, you better be in the company of other buyers, right? It's simple, but people don't think like that. You have to think where the buyers are going to be. And that's why moving averages, RSI levels are so important, because it tells me where other groups of buyers like me are going to come into the market. And that's just step one. Then you have to manage the trade, but it's a good start, right? So that's why we're looking for multiple indicators to line up at the same time, because we want multiple groups of buyers to come in at the same time. Oh, hey, we just hit a profit target. Another one. So that's good. All right. So, and then, like I said, if we find something, we'll see, I'll buy it at the end of the day if we find something. And then after the market closes, if you have any questions at all for me about anything I discussed today, any of the trade setups I took or did not take, please let me know and I'll try to clarify it. Don't be shy. Just type it in the chat. And also, if you want me to take a look at any of your positions or any potential position symbols that you'd like me to look at, I'm happy to do that. Or if you just, have any trading issues that you're struggling with, let me know. Let's talk about it and see if we can get something worked out. So, all right. Well, that's the plan. So I'm going to go ahead and run the U.S. legal disclaimer. It's about 40 seconds, and I will be back right after that. So hang tight. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Thanks for holding through that with me. And hey, Vera Music is here again today. Hello, how are you? Thank you for coming by. Frederick, my friend, good to see you. Hey, I got your email, and please remind me at the end of the, after the market closes, because I want to go over those charts with everybody, because I think it'd be helpful hopefully for them and for you. Vera says, do you still long on the S&P? Just curious on the study you showed yesterday. So Vera, I buy the S&P each day at the close and I sell it first thing in the morning. So I did buy it yesterday at the close and I sold it first thing this morning. So I will buy it again at the end of the day. So I'm always long the S&P overnight, just not during the day, because that is, in the overnight session, in the pre-market session, historically, that is when the greatest gains from the S&P comes. So, and I'll get to that. I'll show you that more in detail when we go through each one of my positions. But at the moment, I am not long S&P, but I will be long S&P at the end of the day, and then Monday morning, I will sell it first thing, and then I will buy it again Monday afternoon. Hope that makes sense. Hey, Murat from Norway, how you doing, my friend? Good to see you. Brian's here. Brian 512, my little prodigy. I'm glad you're here. Hey, Brian, I don't know if you listened to yesterday's podcast, but under the section where I usually do trader psychology, I did that one specifically for you. So if you haven't watched yesterday's podcast, I think it's around the 30-minute mark or so, but take a look, because it's about long-term investing and the importance of investing each month, and what the returns can be. And when I saw that, I thought of you, because you're so young, and you would benefit more from that than about anybody, because you're so young. So please watch that, and let me know what you think. So, and Frederick says, yes, no problem. All right, everybody. So let's see. Wow, the Dow just went positive. All right, good enough. All right, well, let's head through my positions here and get rolling. So, all right, I did buy Amazon back on the 6th of August, and the reason I bought it was the previous day we closed under the 250. This is this line here, the 250-day simple moving average. Next day we closed back above. This is a very good back-tested long-term approach to trading Amazon. The system goes like this. If the previous day it closes below the 250 and then the next day closes above the 250, buy it, hold it as long as it stays above the 250 day. That's the mechanical trading approach. I'm not trading this one mechanically, but I did enter mechanically with the previous day under the 250 and then the day that I bought it over 250. So that was the mechanical side of it for me. Now moving forward, I'm going to trade this discretionarily. But you can see it has moved up nicely since we've bought it. It was up strong yesterday. I did hit 2 profit targets yesterday. Is down a little bit today, but it's an inside bar, meaning it hasn't gone higher than yesterday's high. It hasn't gone lower than yesterday's low. So as long as this stays above the previous day's low, I will keep it. And I will continue to phase out if it continues to go my way. Kind of my red flag area might be here about the 100 if we reject the 100-day moving average. If we reject the 50-day moving average along with the 50 RSI, that might also be an issue. My ultimate profit target on Amazon on this particular trade is 1953. If it just moves up and it doesn't do anything naughty, I will just continue. However, if it has issues probably at the 100 and the 20, I may go ahead and just lock in profits there. If it has issues at the 50 RSI and the 50-day moving average, I might lock in profits there. To the downside, if Monday we close below today's low, I would consider taking it off and just locking in the couple profit targets that I had to keep it a loss. The worst thing you can do is when you have a profit and it starts moving your way, of course you have no control over it, but if it moves a substantial amount your way and then comes back to your profit target, your entry, I usually just go ahead and take it, just because I just don't like the idea of letting something going from a nice profit turning into a loss. But we'll just have to do this on a case-by-case or a day-by-day basis. But anyway, it has rallied off the low. It is still within the third ATR channel. But so this has been a nice profit target, and again, I mean a nice profitable trade. But again, I did phase out 2 profit targets yesterday, and that's why I like to phase out. I like to play offense and defense. When things go my way, I like to take some off. That's the offensive part. The offensive part. If it starts going against me, then I have to play the defense. So, just like any sports team, they have to play offense and defense. Some people are really good at offense, but horrible at defense, and vice versa. So you have to play both. So that's Amazon. No profit targets today. DDM. I did buy DDM back here on the 6th of August. Same signal as Amazon. The under the 250, the over to the 250. This is a pure mechanical back-tested approach for me. This is a robot trade. I will continue to stay in DDM as long as it is above the 250 day. No matter what happens, no red flags, no rejections. If it keeps moving up, I will continue to scale out until I'm out of shares or we close back below the 250. And just to give you an example, I took this exact trade on DDM back here on the 6th of June. Instead of being based off of the 250, it was based off the 200. That's also a legitimate back-tested approach, is over the 200. Previous day we were below the 200. Next day we closed above the 200. If it would have closed back below, just the next day I would have got out with a small loss. But as you can see, this was a really nice trade for me. I scaled out, then it moved sideways, scaled out, and I scaled out up to here. So identical trades. This one was off the 200. This one was off the 250. But so far it's been a nice trade, right? Because I bought it here at 46.37. Now it's 47.72. Have not hit any profit targets today, but hey, it's possible, right? But the main thing here is that we were so low earlier in the day, and again, that's why I like to wait until the end of the day to make my decisions. Good thing I didn't get out here when I was like, oh no, it's going down, I better just get out, So anyway, good profitable trade so far. We'll scale out on the way out till I'm out of shares, or if it closes back below the 250. But let's say it moves all the way up here. I scale out, then it comes all the way back down. Well, it's unfortunate, but again, if I scaled out of 70% of my position in the profit, then it's a lot easier to take that down move with the 30% that I have remaining. Okay, Google. All right, so Google's another good trade that we've had on recently. We did buy this on the 7th of August here at 1175.91. Now it's 1195.13. Why did I buy this? Well, so we were moving sideways here until we had earnings. We had this huge gap up on earnings. It took everybody by surprise. Then it gave it all the way back. But once it started coming into the value zone, which is the green lines here, the 1 ATR channel and the -1 ATR channel, it started to interest me. And it started to interest me, one, because we're in the channel. Two, because the previous down day here this was resistance. Now it's support. It did go under the support. It lost the support, then moved up back over support, still in the channel. Then on the day we bought it, we had a V1. Here's day one. Here's day two. Day two washes out day one, but reversed, right? This is like an arm wrestling match. The one guy's moving the arm down, almost has him pinned, but then the momentum changes and the buyers took back control of that arm wrestling match and moved it back up. So technically, here's day one, day two washes out day one, day two closes above day one's close. That was my trigger. That's my V1 trigger. But not just because it was a V1. It happened, it tested the support here, went under, then back over, happened in the channel, went over 50 RSI, went over the 20-day moving average. So there were a lot of good reasons why I took that trade there. And as you can see, I hit 2 profit targets yesterday on Google. It did come back a little today. It's an inside bar, the same as Amazon. It is holding the 10-day. It is holding the 5-day. It's still above a 50 RSI. So this looks fine. It's a profitable trade. I'm glad it rebounded from today. But no profit targets today. Where am I going to get out of this trade? Probably the 20-day moving average, because we've moved into the profit target. I don't want to let that turn into a loss. And it also makes sense the 20-day moving average would be taking out yesterday's low, and it would also be right near our profit target, our entry. So, sometimes you can have great trades, but they'll come all the way back to your entry. But that's why I like to phase out. I like to lock in once the market gives me something. So in the worst case scenario, and unless we have a massive gap, if we get to the break, if we close below my entry point on Monday, I'll go ahead and just get out. But anyway, so far so good. All right. When I started the channel, when I started the podcast today, I heard my entry, and that was my first profit target there on Johnson & Johnson. So I did buy Johnson & Johnson yesterday, back on the 8th of August. And why did I buy it? Well, we had a V2 inside the channel. Here is day one. Here is day two. Day one thoroughly washes out day one. Day three closes above day one's close. It also happened within the channel, which I like. It also took out this fractal. A fractal is a high with two lower highs to the left and two lower highs to the right. Also closed above the 10-day. Also had a positive MACD. We were under a positive MACD. So all those things combined is why I bought it. It was under the 200-day, and you guys know my rule. If I get a signal under the 200-day, I only take a half position, because in the big picture, the company is weak if it's under the 200-day, but it doesn't mean I still can't take positions, but I take half. So anyway, we did hit one profit target right when, 20 minutes ago on this. So that's good. My ultimate profit target here is the 200-day moving average. The blue line is the 50 RSI. So if we challenge that 50 RSI today and then lose it, I'll probably go ahead and just lock it in, lock in the profit. But if we are able to close above there, I will hold it. As it's sitting right here, if it closes here, I will also stay in the trade. But that's been a good trade so far, one-day trade. All right. Merck. So I did buy Merck back here on the 31st of July. Why did I buy it? Well, we were moving sideways here. We had earnings, we gapped up, we reversed, but it held the previous high, which was resistance. Now it's support. The next day, it went up, came back down, but we had a 520 cross. This is the day that I bought it. I bought it right here at 82.99. MACD had turned positive. So, we went up into this new range. We tested the support below us. We bounced off it. The earnings day also triggered a fractal, which was good, but that was one day early, so I didn't take it just because of the fractal. But the main reason I took this was because MACD went positive. We held the support of the high of the previous range. It happened in the channel. RSI was 50. The RSI was 50, showing that there was positive momentum. And the main reason that got me off the fence to take this trade was on that particular day, the market was down big, and Merck was not down big. It showed relative strength, meaning if the market's down huge, but you have a stock that's barely down or even up, that shows relative strength. And that is another indicator that I use. But you can see this has been a really, really nice trade so far. Every move up, we've taken a little off, taken a little off, taken a little off. Today we hit one profit target again. It did break out of this previous range, another fractal, which is good. I wouldn't take this fractal here because it's too high, but we're in the trade, so it's okay. So I am out of about 60% of this position at this time. So it's been a nice profitable trade. Let's see, from entry to where we are right now, about 3.3%. So not bad. We've been in this trade 1, 2, 3, 4, 5, 6. Yeah, just a little over a week. And who knows? Maybe we'll zero in on that second profit target today. So that's Merck. Oh, I should say, going forward, how am I going to manage this trade? Well, we're clearly extended from our entry. So I don't want, of course, I don't want to let this come all the way back down here. Probably a close below the previous day's low or a close below the 5-day moving average will be my trailing stop on Merck. All right, here is the all famous SPY. And Vera Music, you were asking about this earlier. So as you know, I do buy the SPY each day at the close of the market, and I get out the very next day. So yesterday I bought this here at 293.62, and this morning it opened up at 292.59. So I did take a loss overnight, not too big, just a small one. When it was down here earlier, I was like, "Whoo! Am I glad that I got out at the open and didn't have to go through all of this." So I will be buying this again today. At the end of the day, I do it every day. And if we have some new viewers, you might think, "Why would you do that?" It does not look very precise, and you are right on the surface. But this is from Lizanne Saunders at Bespoke Invest on Twitter. But here you have two options. Number one, you could either buy the SPY, the SPY ETF at the open each day and then sell it at the close each day. So you're only in during the market hours. If you use this approach from 1993, you would have actually returned a negative 13.9%. But if you do the opposite, which I use, I buy the SPY each day at the close of the day and I sell it first thing the next morning at the open. And if you use this approach, you would have actually returned 634.2%. So buying at the open, selling at the close, negative 13. Buying at the close, selling the next open, a positive 634.2% return. Here you can see the chart. You can see this certainly has had an edge since 1993. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. And you can see, I mean, it's very clear this approach has an edge, but you always want to be careful with your position sizing. Position size small, treat this as a long-term trade because it does have drawdowns. I mean, it has multi-year drawdowns, but you have to look at this in the big picture. So always, if you're going to use this approach, always position size correctly. So that being said, I will go ahead and again buy the S&P 500 at the close today and then sell it first thing on the open Monday morning. And I've been using this approach since February 26th, and it has been a really good, profitable approach. Doesn't always win, but it's certainly profitable since I've started using it. That's the key, taking the long term. All right. And then our final position is oil. I did buy oil back here on the 7th of August on that when it dumped. Why did I buy it? Well, for a couple reasons. For three reasons, actually. Let's see if I can get that other one to come into view. First of all, during the day, we went and we touched the 30 RSI and we rejected it very strongly, and then we also closed back above the third ATR channel. So we rejected the 30 RSI, we closed back up into the third ATR channel. The close was above the open, which is also positive, and then we also tested the previous lows back here in June. Let's see if I can make this look a little easier here. Yeah, so you can see we did go lower than the previous lows. So we rejected the 30 RSI, we rejected the previous low, we closed back up into the channel. So that is why I took the trade. It has been a really good trade. It is under the 200-day moving average, so I only took a 1/2 position because that's my rule. But you can see it's up nicely. I hit one profit target yesterday, hit two profit targets today, almost hit that third one, didn't quite get there. But this has been a nice move. Yeah, I mean it's close to 4%. since the entry. So this has been really nice. How am I going to manage this moving forward? Well, obviously I don't want to let it come back all the way to here. I actually could be talked into just taking this trade off at the end of the day because it did reject the 10-day moving average, and it looks like it's rejecting the -1 ATR channel. So that is a potential for me. I'm just going to have to see where it closes, but this has been a really, really, really good trade. All right, so that's it. How are we doing on time? Hey, Steve Burns is here. Good to see you, Steve. Thank you for coming, my friend. It's always an honor to have you here. And thank you very much, Steve, for including me in your list today. It's always an honor. Steve has a list that he puts out on Fridays about different traders that he likes. Today, he did top financial thinkers, and I was included in that list on Twitter. So thank you so much, Steve. I really, really appreciate that. I really do. Yes, what a volatile week. Unbelievable. Unbelievable. Especially the day we were down 700 points, and then after hours, we were down another 550 or something like that. I was like, oh, the world's ending. That's it. But fortunately, we were able to rally back. So that's really good. All right. So listen, before we get into taking a look at my at the watch list and some potential setups for today, I did read this. This is from Stephen Goldstein at AlphaMind 101. Everybody, this is a really great Twitter channel. He's a professional trading coach. He works with hedge funds and professional traders on their psychology. He's got a great podcast, the AlphaMind podcast. You can find it on Apple and Google, all this. But, do yourself a favor and subscribe at AlphaMind 101, Stephen Goldstein. Read his stuff. It is really, really good information. He does know what he's talking about, and he's a professional at helping people with psychology and trading. But it says it's easy. He says it's easy to be swayed by the confidence of others. If you take a trade because someone else is in on it, you cede all control of that trade. You need to own every trade you are in, even before you take the trade. And it's so true. There's so many people that will just take someone's advice on a trade and go, well, he must know what he's talking about. And, you don't want to do that because, like he says, you cede all control of that trade to someone else and what their analysis of the trade is. The real reason that I started this channel is I want you guys to learn how to identify trades and do it yourself. I don't want you to have to rely on services or on this YouTube channel at all. You need to learn how to do it for yourself. But of course, you need to be taught and you need to have an idea. But, I had somebody over here the other day working on the roof, and he said, hey, what do you think? Should I buy Bitcoin? I think I should buy Bitcoin. If I would have said, yes, I would definitely buy Bitcoin, he would have gone out and bought it for sure. I didn't tell him to buy that because I don't want to tell him what to do. But, people put so much energy into buying a car, right? They're looking at all the specs. They're shopping around. They put some energy and some investigation into getting a good deal on a car. But somebody can say, hey, I would buy, I don't know, Amazon. Okay, that's probably a good idea, but, when do I get in? Where do I get out if I'm right? Where do I get out if I'm wrong? People never have answers to these questions. It's just always, oh, yeah, you should buy so-and-so. And then somebody buys it. Maybe it will go up for a while. But then what about if it goes down? Where do you get out? Right? So, learn to trade yourself, learn to have your own process, learn to make your own decisions, and don't rely on someone else, right? I can't stand the thought of relying on someone else's advice on a stock, right? I have to size it up the way I size it up. And you should, with this channel, that's why I'm hoping that you can start to size things up and just don't take, advice from a random person who really doesn't know what they're talking about You know, I used to be part of a public company, the company that I started. I knew what was going on in the company, but do you think that would have helped me with stock trading? I couldn't trade it anyway because I was an insider, but no, I knew all the inside information. The market never did what I thought it was going to do. So, you know what I mean? So anyway, it's easy to be swayed by the confidence of others. If you take a trade because someone else is on it, you cede all control of that trade. You need to own every trade you are in, even before you take the trade. So, you know, don't be swayed by the confidence of me or Steve Burns or anybody else. You know, you got to find your own path, you know, and that comes from education in stock trading, not just taking other people's signals. So anyway, I thought that was helpful. Subscribe to Steve at AlphaMind 101. Do yourself a favor. All right. Steve says, managing a trade is far more important than the entry signal. Position sizing, stop loss, and locking in profits are what profitable traders need to do. That's the difference. That's the difference between people that just buy and just let it do whatever they're going to do, or the other person that manages it. It's all about management. The entries are not that difficult, everybody. It's how you manage the trade, right? You're so right, Steve. Thank you. All right. Well, let's get through the charts and see what's happening. All right. So we have about 23 minutes left. All right. I just wanted to make sure. Hey, ooh, 86.09, and it got to 86.07. Oh no, I hate when this happens. 2 cents away from that profit target on Merck. So hopefully here in the next little bit, you'll hear my little English guy say, order filled. So we're 2 cents away. Come on, baby. Okay. Apple. So, you know, we had that big plunge on Apple. We have rallied back. We're at a 50.72 RSI. We still have the moving averages above us. I'm a little concerned because of the volume on the move down here. We have had a reaction rally back, which is to be expected. You know, not surprising, but I'm not going to buy anything here on Apple. You know, we're having a bit of a ceiling right here. No V1s, no V2s. We have a lot of overhead resistance here. So nothing on Apple for me today. Here's Adobe. Steve uses Adobe in his weekly newsletter at newtraderu.com, and I thought that would be a good addition to put in here as well. You know, we had that big move down. We did rally off the 30 RSI like a lot of stocks did. We have moved back up. We're back above the 50-day moving average. Kind of with Apple, I don't want to buy here. What I'd really like to see is I'd like to see a move down, then back over the 50, giving us a higher low, because the people that bought here, they have their fingers on the trigger, just like Steve has his fingers on the trigger on a couple of stocks today because it's running out of momentum, and if it's stalling out, rejecting these moving averages. So, you know, if this moves back down and then back up, then the people that bought here, sold here, goes down. But if it's still strong enough to move back up, then you have a whole group of buyers that are out of the equation. So nothing on Adobe today. Silver just moving sideways, so nothing here. I'd like to see the 5 close back below the 20 and then back over, like we had this trade back here on the 10th of July. The 5 went under the 20, back over, and we had this beautiful trade and phased out all the way to here. Advanced Micro Devices had the big news yesterday with Google and Twitter. Still up today, so it is stronger. Up higher today on lower volume. I look at that as slightly bearish, but nothing there. Amazon, we already talked about that. The buy over the. Hey, there's Merck. There's Merck. All right, so we did get that one. All right, so oh, sorry everybody, I have to make a trade in this other account. I trade several accounts, so that one.
Order filled.
All right, good enough. Okay, so Boeing, we did reject the third ATR channel back above. It's 44.51 RSI. Really nothing there. A lot of overhead resistance, no clear triggers. Alibaba Group, we had this big move down. We did have a rally, but now the people that bought this down here are likely looking to possibly sell this. I'd like to see it move down below the third ATR channel, then get a higher low V1 back up into the channel with that first group of sellers that bought here selling here. With those gone, that makes it easier to move up. So nothing on Alibaba. Just give me 1 sec. I need to rearrange puppy. Nothing on Caterpillar today. Still under the channel. DDM we bought that back on the 6th with the under and back over the 200. No profit target today, but I do like to see that it is above the 100-day moving average. Walt Disney got whacked up on earnings, has had a rally. I would definitely not buy this here because we have the 50 RSI above us. We have the 50-day moving average above us, which is probably going to be acting as a ceiling and some resistance for Walt Disney. So nothing on Walt Disney here. Etsy had a big move down since earnings, moved sideways, approached the 200-day moving average yesterday, but could not get to it. We're back down again today below the 250, and we may close back below the third ATR channel here. So nothing here. If we could come down a little bit, make a higher low V1, something like that, even test the 30 RSI again, that might be interesting, but nothing today. Ford, like everything else, bounced, did find some resistance at the 100-day moving average, so nothing on Ford today. Facebook, we had this big move down back on the big dump day. We did go under 30, back over 30, which was a positive signal. I did not take this because I had some other tech. I know Steve took this, I think, right about here. So now it's moved up, moved up, moved up, moved up. Yesterday it closed above the 50-day moving average. But, if you were managing this trade, and I assume this is what Steve's going to do, not 100% sure, maybe he has the other ideas, but, being that it closed above the 50 and now rejected the 50, it's a negative sign. So, it would be an option to be locking in profits here. So nothing today. Again, I'd like to see this come down for a couple days. Well, no, not if Steve owns it. But if he gets out, then I want to see it come down a couple days, make a higher low V1, go back up, because higher low V1s are always the best. Five Below rallied, not surprised to see this moving back down. Gold, just very, very high. For me to get interested in gold, I'd like to see the 5-day cross under the 20-day and then back over, or a move back into the value zone with the V1, V2 entry. Just like silver, it's the exact same signal we took here. 5-day was under the 20, closed above. In addition to that, took out a fractal, happened in the channel, and this was a great trade. We phased out all the way up to there. So nothing on gold. Google we have, it's an inside bar. Not going to do anything with Google now. It's not telling us positively or negative one way or the other, so I'm just going to keep the position. Goldman Sachs, above the 50-day moving average, but it does have the 50 RSI and it does have the moving averages above it, so nothing there. IBB, I've been talking about this for a while. The real setup on IBB is when we have a moving average crossover like I just showed you on gold and silver. But this particular one is when the 5 crosses over the 30. This would be the blue crossing over the gray line. So it's not quite there yet, but when eventually, it will eventually cross. But when it eventually crosses that, that will be the signal I'll take, and I will trade that robot style completely mechanically. Intel had that big day yesterday and then gave it all back today, so nothing there. Russell had that move above the 200-day yesterday. Did go below the 200 at one point today, closing back above it. It's a 43 RSI. We looked at the back test with the close under and then close back over the 200. It really wasn't that great on the IWM. What I'd really like to see on IWM is, you see how this is actually one of the trades we had. We bought here because of the 1050 cross. We bought here, got out of 25% of our position, moved sideways, took a half position here, got out of 25%, added another half position here, phased out, phased out, phased out. We only had about 30% of our profit, 30% of our trade position left, and then we had the big dump, and I actually hit my emergency stop on the remaining 30%. But all in all, it didn't hurt the account because we had phased out. But now the 10 is below the 50. Now when the 10 crosses back above the 50, that will be the entry for me. So need to wait for that on IWM. Russell 2000, we just talked about that. That's one of our positions. We did hit one profit target today. You know, where am I going to get out of this to the downside? Probably the 10-day, close below the 10-day. Coca-Cola, just missed out on this V2. Day 1, day 2, day 3, day 2 washes out day 1. This did not close above. Otherwise, I would have taken this trade. I was looking, but it closed under. But it moved out without me anyway. That's fine. Here's a V2 also. Higher low V2 did not take this trade, but this one has worked out. This one has worked out well also. Hey, Mount Doji's here. Good to see you, Mount Doji. Hey, I was telling Brian in yesterday's section on the trader psychology. I did it specifically for Brian, but I also mentioned you, Mount Doji, because I think you're in your 20s. And so I did mention you in that about, you know, the power of saving $1 a day and how important it is at your age. So if you get a chance, take a listen. It's only a few minutes, but it was for you and Brian. MasterCard, we did buy MasterCard here on the 5th of August. We rejected the 100-day moving average. We rejected the 30. We closed back above. This was a really great trade. We bought it right here, and I ran out of shares yesterday near the top. So this was a great trade. Over 4% position. I'm sorry, over 4% return on this in about 4 days. So this was one great trade, but I did run out of shares there. Merck, we did hit 2 profit targets today, so this has been a really great trade. Microsoft, you know, it is above the 50 RSI, but there's no real signals on this today. I don't know how the 520 moving average crossover works on Microsoft. I haven't back tested this, but I don't have time right now. You know, Netflix is an interesting one because here we make a lower low. We formed a nice V2 yesterday back into the range. So we're now back into the range. Today we tested the range, bounced off of it, which is positive, but we did reject the -1 ATR channel and we did reject the 10-day. So nothing on this one. Nike, really nothing there today. I did buy this here on the 2nd of August when we had the 230 RSI confluence, but it wasn't able to hold. I had to get out here, immediately reverse back, but I haven't gotten back into this. Philip Morris had a couple rejections off the 200-day. It's a 50-54 RSI. You know, I'm not going to buy this here, but, you know, it is starting to look a little decent. I mean, you know, possibly we can move above all the moving averages. That would be good. MACD is not positive. So really nothing here today, but it is, you know, the RSI is above 50, and we are close to moving above the moving averages with 2 rejections and 2 tests of the 200. So nothing there. PayPal. Yeah, PayPal not doing too good today. I did buy PayPal here when we had this rejection of the 100 and the V1. I liked that trade, but we got stopped out the next day for small loss. But small losses are okay. The Qs, the Qs did test the 30 intraday, closed back over. They have moved up nicely. Yesterday it closed above the 50-day moving average. Today we're threatening to lose the 50-day moving average and the 50 RSI. So, if you would have bought here, if I would have bought here, I would probably be locking in profits on the Qs here. But that's just me. Snapchat. I was considering buying Snapchat. Yesterday we had this big move up, down into the channel. We had this nice V1. Unfortunately, it triggered too close to the 1 ATR channel, so it was too high for me to buy. In hindsight, would have been a good buy, but again, you want to stick with your signals and you want to stick with your filters. So nothing on Snap. All right, let's see. All right, SPY, we will be buying that at the end of the day. Square is at a 30-30 RSI. I guess it would be legitimate to buy here if you just wanted to use any close below the 30 as your stop, but I'm not going to be buying that. SSO is the S&P bonds. We had that huge move up. We had a huge move down on big volume. We had an attempted rally on lower volume. You might have remembered I said if we got into the halfway point up here, that would probably be a decent short area, and that's probably exactly was the right area. I didn't short this, but that did come to fruition here. So nothing on TLT. Tesla Motors, nothing there. Twitter, nothing. UNG, all over the place, nothing. UNH, I would need to close at minimum a close above the 200-day moving average. Oil worked out nice for us. I'm going to have to make a decision here whether or not I'm going to get out of this trade. Let me look at the weekly. My feeling on this one is I'm probably going to get out of this trade today and just lock it in. This was a nice trade, over 4% trade in 2 days. We did reject the 10-day moving average. We did reject the -1 ATR channel. And it's a counter trend trade. You need to be a little quicker with those counter trend trades on taking profits. Staying in this trade would also be fine, but I think I'm just gonna go ahead and lock it in, to be honest with you. So actually, what do we have? Okay. All right. The dollar index is interesting because we had this big move up, we move back down, we're in the value zone, we're moving sideways. So everything's lining up here. Now we just need a V1 or V2 to trigger us upside into the trade. So nothing there yet. VIX, we had that huge move up, we've moved down. I want to see it come back down into the value zone, or at the very least, if we tested the 1 ATR channel on the 50-day, the 20-day, at the same time we have a 50 RSI and then get a V1, V2, it would be great. We did buy back here. This was a huge trade for us. We have a V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1, and we also rejected the channel. And this was a monster trade for us a week ago, and I actually ran out of shares, I think, right about here, but that was a monster trade. Verizon, I do let me point out on VIX real quick, because Steve made this point the other day, but you can see the VIX index currently looks like it's holding the 200 days, so that's not such a great sign for the market in general. Doesn't mean the market's going to go up or down, but just an observation. Verizon, nothing on Verizon. The very least, get above the 200. Walmart, nothing there. Energy Select is down today, nothing there. Financials, oh, now the market, yeah, it looks like the market turned negative on us. All right. Real estate has had a really nice move. Utilities had a nice move. I did buy utilities here. I like this V2. Here's day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. But it did move for us initially, and then I had to get out, and then I never got another signal to get back in. Healthcare has moved up nicely off of the 200. And pharmaceuticals. So I don't see anything to buy today, guys, at all. And we're going into the weekend. So I think the important thing here is we need to turn the attention to our current positions. Amazon is still holding, you know, on the negative side, it has rejected the 5-day, but it's still holding yesterday's range. DDM, this is a mechanical trade, so nothing there unless it closes below the 250. Google, seems to be holding halfway of yesterday's bar. It's still inside. You know, it's probably fine to keep this. Johnson & Johnson. Did we get up to the 50 RSI? Let me check that real quick. Ooh, pretty close. Pretty close, rejecting the 20-day. I did hit one profit target, so I'm probably just going to keep this one. Merck, boy, did we nail that top profit target. So we did hit 2 here today. This one's fine. SPY, will be buying this again at the end of the day. And then USO. That's a bit of a tough one on oil. I think I'm just going to go ahead and lock that in, call that a good 2-day trade. I don't like it rejected the 10, and I don't like how it rejected the -1 ATR channel. And you know, from top to bottom, we're getting back. We're close to about 50% of that move from a Fibonacci standpoint. So I'm going to go ahead and just lock in the profits on oil.
Order filled.
And then over here as well.
Order filled.
All right, and then yeah, so we went positive, now back to close to 100 points down on the day. So I'm happy with today's results. Today is pretty much a break-even day for me. Earlier in the day, I had made another high for the year, which I'm always grateful for. We made a high yesterday, and earlier today we made a high. Now it's pretty close, I think, to unchanged from yesterday. So yeah, I think we're fine. I mean, Amazon is still in the range. DDM is mechanical. Google.
Order filled.
Oh, that was the market.
Order cancelled.
All right, 291.62. So our new entry on the S&P is 291.62. So we are now again proud owners of the S&P. So that other than getting out of oil, that was the only trade we took today. So, listen, if any of you guys have any questions, you need any clarification, you want to discuss anything, don't be shy. Just type it into the chat. I'm very happy to
Order
answer these
cancelled.
questions for you. But before we get to that, I just want to put in a quick plug like I do every day and let everyone know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. So if that's of interest to you, if you'd like to do a one-on-one lesson with me, please let me know. It is a good idea to do one-on-one lessons. I mean, the live stream that we use here, that we're doing right now is good, and I'm really hope that it's helpful for people. But one-on-one lessons are always better, mainly because you have the quick back and forth, and mainly because after I teach you, I'm going to ask you to teach it all back to me. And that way I know that you really know. So, if it's of interest to you, my hourly rates and my email are in the description of this
Order
video.
canceled.
And you could also send me a message on on Twitter. And just so you know, it usually just starts with a free phone call or free Skype call. And I just want to get to know you better. I want to understand what your trading approach is, what your challenges are, how much time you have to commit to this, how much screen time you have, what your financial situation, and then I'll put together a customized lesson plan to help you achieve your goals. So, and then lastly, as always, if you guys could hit the thumbs up button, I would really appreciate it. I know I harp on this all the time, but it does help promote the channel and get the channel out to more people, and I would like to help them. I get a lot of emails from people telling me how much this channel has helped them and how they view trading differently now. And so I do want to help as many people as possible. So if you could help me help them get to me on the channel by hitting the thumbs up button, I would appreciate it. So, okay. Let's see. Greg says, amen, Greg. You are preaching the trading gospel today. I am, brother. Yeah. All right. Murat says, can you look at the MACD for the dollar index? If it forms V1, V2 again, how will it compare to the previous low? It looks like the momentum is not too big in current sideways movement. All right, let's take a look. You have a good weekend as well, Michelle. Thank you for coming by. It's nice to have you here. It's a nice surprise. Thank you. All right. All right, so Mert says, can you look at the MACD for dollar index? If it forms V1, V2 again, how will it compare to the previous low? Murat, are you asking how the MACD will compare with the previous low? Is that what you're asking? It looks like the momentum is not too big in current sideways movement. No, I mean we are in an we've had a negative cross, but not too much. And of course, anytime you move sideways, MACD is going to tighten up here, and these bars are going to get closer. I'm not quite sure I quite understand the question, Murat, but the way I look at this is, I mean, look at this move, huge move of momentum, right? Now we've come back down. We have the price has certainly stabilized here, and that's what we're looking for. MACD has gone negative, but not by a huge amount. I mean, look at the depths of the bar here compared to the depth of the up bars. To me, this looks like a dip buying opportunity if we get the V1, V2 trigger. We're still above 50.82 RSI. I mean, that it doesn't look too bad, but just need to get that trigger. All right, so here are a few charts from Frederick that he wanted me to go over. So let's take a look. So on 8-8, he bought a V1, re-entered over the third ATR channel and support line. Yes, that is correct. On the 9th, he sold, close under the third ATR channel and support. Yeah, I think that's fine. It did hold the halfway of this bar, but it did lose, you're right, that other support over there, and it did close under a 30 RSI. So I think that was the correct move. However, I'm not sure, Frederick, on the day that you bought it, did it get over the 30 RSI? I'm not sure it did. I'm not familiar with this chart, but it looks like the green down here, what's under 30, it looks like it stayed green. So if that were the case, I don't think I would have bought this if it was still under 30 RSI. So maybe on your end, maybe you saw it above 30, but me personally, even though you have this nice V1 back over the third ATR channel, sixth ATR, third ATR channel, and the previous support there, that range, even with all that going for you, I don't think I would have bought this if it hadn't closed above 30. Frederick says not over 30. Yeah, I don't think, honestly, I don't think I would have bought that, Frederick, because of that reason. All right, let's take another look here at another trade. 8-7. Bought the V1, tested the third ATR, closed over 30, closed above support. Still in the trade, still in the trade. Yeah, I'm okay with that one. Looks like it went under the 30 back over. Yeah, that one's fine, and that one still looks like you're about pretty much even. I don't know if you took any profits off here. I don't think you did, but yeah, this one's still above a 30 RSI. Yeah, this one looks fine. And then your last one here, August 8th, V2 re-entered third ATR channel, close over the 30. Yes, that all looks good. Was under the 30, under the third ATR channel. Formed a V2, back over the third ATR channel, back over the 30 RSI. Yes, this one looks good, and it looks like it had a nice move up and then back down, unfortunately, but it did move nice your way. Yeah, this one looks okay to me as well. All right, so those are Frederick's charts. Good job, Frederick. I mean, you are really looking for these entries, and in my opinion, you are finding them. The only flaw I saw at all there was that one where it didn't quite close back above the 70 or 30 RSI. Okay. Does anyone else have any questions for today? Boy, it's been quite a week. And a negative close on the day here today. We went positive there, but maybe people got a little scared before the weekend. I want to check real quick and see. Okay. So it looks like Steve did exit his IW. He exited his SPY position after the loss of the 50. And IWB in the Qs. But anyway, had nice returns on that. Good trading, Steve. Congratulations on taking those dip trades and getting nice trades out of them. Frederick says, no profit, too much commission, I prefer to wait. Yeah, we talked about that before. You know, because of the commissions and the other things we discussed, you know, maybe for you, a one entry, one exit type of trade is better. Well, everybody, if there are no more questions, oh, there is. Frederick, for a beginner, is it better to trade when prices are over the 200 SMA? I think so. Yeah, I think that would be a good rule of thumb. I mean, Paul Tudor Jones doesn't trade anything under the 200-day moving average. That's just a rule of his. Um, but I think that would be a good guideline for a beginner. Although there are setups under the 200 days. There's no doubt about it. But I think it would be a reasonable rule to follow, Frederick. I think it would be a good idea if that's what you wanted to implement. So it was a great profitable week this week. I am so thankful for that. I'll tell you what. I was gonna mention that you know as I like to take my trades within the 1 and the -1 ATR channel, and I like to scale out, and I get a little trigger happy when I get up here to the 3rd ATR channel, because a lot of the time prices fail at the 3rd ATR channel. And if I get out of a trade and if it keeps going up here, that's fine. And if you're doing the same thing, don't sweat that it's still moving away from you, even though you got out, because you left the bar early, maybe when the party was still going a little bit, but you don't want to be there at the end of the day closing down the bar in reference to a trade, because you can see what can happen. I mean, if you got in back here and maybe you got out in this range and then you saw it take off, I'm just kind of making generalizations here, but a lot of the times if you get these big waterfall, big moves, you're glad that you got out somewhere here. You didn't get the top, right? But going into this week, I was pretty light up into this area because things were too high. The market was moving. I didn't have a lot of positions, but sitting on my hands was a good idea because I knew. I mean, look, we had double tops, we had bearish divergences. I pointed these out to you guys that it was concerning me up here, and it's exactly what happened. And you would be very happy to have gotten out here or here or here now that the market's all the way down here. So the reason that we navigated the last couple of weeks so well was because we were light in the positions up here, right? So this move didn't affect us this much. I did poke my head back into the market around this area, and I was long the VIX here, so I did profit from that. Here, I did stick my head into the water, and that one big day really did pound. But the main thing I want to point out here is that I was in a good psychological state in this area, right? I didn't have a lot of losses under my belt here because I was so light in positions. And even though I did take the 1 here, I didn't have huge positions. So I wasn't destabilized. I was still in a good place where I could still take these trades on these deep dips. I'm sure people that bought up here did not buy down here. They had gone through too much pain to actually pull the trigger down here. So it's one of the reasons why I like to phase out. It's one of the reasons why I like to lighten up when we get into this area. So I'm in the right state of mind to buy if we do have some of these dips. A lot of people wish they would have bought these dips, but maybe they just didn't have it in them mentally to do it after withstanding such a huge drawdown. Vera Music says, when completing the course and reach consistency, how much would be a reasonable amount of invest in order to make a decent living from this method? Well, that is a tough question, Vera. There's a lot of variables in that question. One question is, what is a decent living? How much is a decent living? For some people, it might be $30,000 a year, and for other they need $300,000 a year. As a general rule, my goal each year, and I don't achieve it every year, but I achieve it more years than not, is somewhere between a 12 and 18% return on the capital that I put at risk. And, if you invest $100,000, then, based upon my projections, $12 to $18,000, is that enough for you? If it's not, then maybe you need $200,000 or $300,000 to invest, based upon somewhere between let's just say a 12% return, right? I'm not saying you're going to get that, but I achieve that often. So I think it's pretty conservative for the way that I trade. So, if you needed $36,000 a year to make for a reasonable living, you probably need maybe $300,000. See, a lot of people get into trading and they have 10 grand or they have 15 grand and they see all these ads and commercials about how much money people make. And hey, I took 12 grand up to 100 grand. Okay, well, good. I'm glad you did that, but you had to risk a lot. You had to risk almost all of your money to do that. And for me, capital preservation is the most important part, not the returns. So, I look for good returns, decent returns, consistent returns. But back to your question, how much money do you need to make a decent living? Well, first of all, you have to decide what is the decent living. If you start with $10,000 and you make $1,200, if you have a good return, 12%, but you only have $10,000, $1,200 probably is not enough for a decent living. Does that make sense, Vera Music? It's kind of a broad question, and but in general, for me, between 12 and 18% return is doable. And then you have to decide how much in dollars would a 12 or 18% return be on any initial type of capital. If you have 100 grand and you live simply in 12 to 18%, $12 to $18,000 is enough, then maybe 100,000 is enough. But for most people, I think they need more than that, so they would need more capital. Frederick says, okay, good. I will focus on that. What about trade only 1050 crossover? Yeah, I think, a 1050 crossover, EMA crossover, or SMA crossover, depending on what you're trading, I think that would be good. You don't have to sit in front of a computer all the time. It's a much easier way to trade. I mean, there's positives and negatives to trading that. Yeah, you and I should talk, Frederick, on Twitter, so I can get maybe a little bit more information. Hopefully, maybe we can work out a little plan for you. Vera Music says, yes, sir. Thanks a lot. 12 to 18%. Okay, got it. Now, you're not always going to get 12 to 18% Vera Music, just to be clear, right? Right? I mean, that's my goal. Doesn't mean that you're going to get that or anyone else is going to get that. Doesn't mean that I get it all the time, right? But at least it's a reasonable goal. Murat says, Guy, there is only 3 thumbs up so far. Oh, man. That's no good. Yeah, hit the thumbs up button if you can, guys. I appreciate it. I would appreciate it. So, all right. Anybody else have any other questions? Please let me know. Otherwise, I'm going to get up in the mountains, go for a hike. I am feeling better today after having the flu, so I'm going to plod around up there a little bit and get some exercise. All right, so Vera Music, thank you for coming by. I appreciate it. It's nice to have you in the group. Murat, thank you so much, my friend. I appreciate you coming. It's nice to see you. Frederick, thanks, buddy. Good to see you. We'll have to stay in touch by email. Michelle, that's my friend from Utah. It's a nice surprise having you. Thank you for coming. Mount Doji, hope you're doing well, my friend. Hope everything's good, and thank you for coming by. Steve Burns, good seeing you. Always an honor. Oh, by the way, Steve Burns, I listened to your podcast on with Christopher Uhl. That was really, really good. And thank you again for including me in your list on Twitter today. And Brian, good seeing you. And yeah, check that out. Yesterday's podcast, Thursday's podcast. And I think that is, and JT. It's good to see you, JT. Hope you have a good weekend. So thanks everybody for coming by. Appreciate that. And have a good weekend. Go out and do something nice for somebody today. And God willing, I will see you guys Monday during the last hour of the market. And if you have any questions that you didn't answer, that I couldn't answer today or you didn't think of, feel free, send me an email or send me a message on Twitter, and I'll try to answer. So, okay. Thanks everybody. Take care now, and hopefully see you Monday. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.